Okay, hello traders, and welcome to this live intraday strategy webinar. Today is Tuesday, April 30th, into the close of the month, and I'm Michael Boutros. Good to be with you guys this morning. Kamal, Kelly, Mark, Pooja. So we're closing out the month with some interesting moves. We'll be tracking this pullback in the DXY, a little bit steeper than I thought, but loving it, not complaining. Fueling a topside break in Euro Sterling, challenging at this point. A topside break there as well. We'll hit dollar CAD. Obviously, guys, this week, keep in mind, huge event risk on tap. We still get the FOMC on tap tomorrow. Super Thursday with the BOE and the quarterly inflation numbers there. Non-farm payrolls on Friday. Buckle up. Still got a lot to go. We'll cover Euro, Key, Gold, Aussie, Dollar, Swiss, and Kiwi. And that's what I have on the list for today. Let me know if you have any other setups or trade you want to. Kelly says, "Good morning, my friend. Let's make some money." News came out of Canada just now. We checked the dollar CAD. Thanks. Let me take a look. Sure. So it was 34.37, right? That's still the level that we were talking about. Not surprised here. GDP negative 0.1%. Expected flat read. And that's what everyone's running with, is the contraction in GDP versus the expected flat read. So a little bit heavy on the CAD, right? Obviously bearish CAD, bullish dollar CAD, but the big level is this 34.37. We'll come back to this one, Kelly, but no surprise here. Now, I wouldn't go chasing it just yet, but 34.37 is going to be the big pivot for me on the close. Even intraday, if we spike down into these regions, it might be a decent setup, but we need a daily close below 34.37 to get this thing, to refute rather, the upside break that we saw. So I'll come back to this one, let the chatter kind of dwindle here a little bit. Here's the 30-minute. And here's the 10. Yeah, might be a decent setup. We'll check it out again. Yen pairs in brief, weekly, monthly levels, please. Bippin, we'll take another look today short. Which specifically ones did you want? I know yesterday you came in daily effects. That room is so packed, guys. There's like 100 people in there on a daily basis. So I try to narrow you guys out where I can recognize you, but I can't always do it. So let me know what yen pairs specifically you're looking at. The only thing we've been tracking is Kiwi yen and dollar yen. So we'll definitely take a look. Kelly, you're more than welcome. Let's start with a quick wrap up of just where we are with the DXY. Here's the deal with this thing. It's freakishly clean. Do you see this? So 97.42 is a level I told you guys yesterday. That's last year's high week reversal close right here. It was basically the opening range highs for the year. We just broke that last week. Here's the pullback. Again, that 2011 slope is ridiculous, guys. This would be ridiculous if it works, okay? This is the same gradient. It's been insane, all instrumental in every single one of these turns in price. Here it is again. So our cautionary talk on Monday, or yesterday rather, was well warranted. You know, you're in resistance. You closed right into that slope on Friday. Wasn't a break above. So what do you do here? Here's the daily chart in DXY. Pretty daunting. Okay. Now, objectively, the level I talked about was again 97.42 last year's high week, high day close. That converges on basic slope and the opening range highs for the month. Now we're basically coming into that pretty darn close at this point. If it's going to bounce, if it's going to find any kind of recovery relief, this is where you'd start to look for some sort of base or some sort of near-term bounce, at least in this decline. But even the daily chart doesn't give us much, right? The only thing I want to highlight here is 97.42, again, that high day close, slope, and monthly open. Okay, the monthly open is right in line at 97.18 still. So levels of interest of where the downside here could find some exhaustion, but man, what a spot to turn from, right? I can't get over this. I can't get over this. Um, if the weekly chart does materialize with like a real down reversal candle back below 97.42, we still might be right on track, guys, for a larger pullback in price. So you got non-farm payrolls on tap. We're heading into the close of the month today. Again, use caution, guys. Not the ideal scenario for intraday positioning as far as environment is concerned. So just take it easy, right? We're gonna start up a new month right out the FOMC. We're gonna double back and hit the BOE the next day, then non-farm payrolls on Friday, amid talks that we might need to see some sort of shift in the Fed because the numbers came out so strong on Friday. Whatever, we can go over that conversation for, you know, there's there's an argument to be made for both sides. So is a stronger GDP print, and if we get stronger, well, like I said, the employment picture is pretty much almost there at natural. Is the Fed going to start to hasten its pace? We'll have to see. Markets are still not, making that bet. CME, checked it yesterday, but let me take a quick look again. Yeah, CME for December still calls a rate cut of 25 basis points from where we are now. At least, right? Aggregate. So we'll see. We'll see if this dollar turnaround is good. Objectively, the monthly opening range broke here. This is the origin of the breakout. It's also slope support. That's why I'd start to wrap things up if you're holding shorts on the index towards 97.42. Here's what it looks like on the intraday chart. I'm not sure I showed you guys this slope yesterday. This might have been me last night. Oddly, it's just ridiculously, it held. So look where 97.42 is, that high day close. Guess what? Lower parallel for the current operative slope is right there as well. Here's what it looks like a 30-minute chart. It's a little bit cleaner, right? So even on the immediate approach here, you're coming into some support. It's a little bit lower. So here's the last update from the 25th. There's that turn right ahead of 98.52 and the move lower. We've now broken both of these targets. We're approaching the high day close right here, 97.42. Look for a reaction there, okay? That is DXY on the drop down here. Looking pretty good ahead of the FOMC. Yeah, Ty, here's the combo. Here's the side-by-side, sir. All right, so let's segue into last night's update. Here's number one, Sterling. Now let me take that back. We'll cover this as it's basically going down on Thursday on our next webinar. But man, Sterling's at a big level of support. We talked about this yesterday on the webinar as well. Here's the weekly chart that we've been following. Slope support off of the lows that we've been tracking from last year. It's been super clean. The upper parallel again catching the advance. Here's the 618 line offering support, break 2 weeks ago. Here's last week's low at the lower parallel. Here's the recoil. So the first level that we highlighted was, well, it's basically going to be taking a look at this 52-week moving average is what I wanted to look at. We're testing that now. But if we break rather above this slope, you'd start to look for resumption. We're not there yet. But certainly the initial response to this key support level was well warranted, right? And we talked about that yesterday. Here's what the daily chart looked like as we were testing it into the weekly open. These are sort of your ideal plays where the weekly opening range is taking shape just above near-term support. It's exactly what you got. And here's the breach to the upside. So alongside that, again, near term, you had that 200, 100 day moving average confluence region. I think I gave you a range yesterday, 29.57, 29.69 right here. That's this spot. And then your next big region is 130. What's 130? Well, it's the 618 of the February advance. It's the pivot high they made in January. And basic slope resistance. One touch, two touch, three touch confirms. We're right here. Sprinkle some salt on top of that. Here's basic slope support. One touch, two touch, again, third touch before the break. Former support, now resistance. We're in a spot. We're in a bit of a pickle right here. Okay? Couple things to note, which is getting me more excited about this trade. The momentum trigger, if today closes, will have given out as far as the resistance trigger. Again, a 3-point touch. We need the close. But if that gives out, again, that would be a suggestive change in behavior that we're seeing a move higher in sterling. It's just too clean. It's freaking me out because it's too clean. But we need to see some follow through today. The biggest thing that could happen, guys, and I always sit back and I always try to say, what's the biggest thing that would just flush everyone out? Screw as many people as possible. The worst thing that can happen right now is that this thing pulls back and closes back below this, moving average confluence around 2960s. Such a scenario would scream exhaustion, would scream fake out. That would be like a great short against the high, and you're basically banking on a break of this slope. If things close at or above these levels, it would be really suggestive that we have seen a little bit more of a concrete near-term low put in place. Okay, now I recognize that we're heading to the close of the month. Again, we have the BOE on tap. It's not just the BOE, it's Super Thursday. You get the inflation figures as well. So yes, this is subject to major headline event risk. That being said, where we turned, when we turned, heck, how we turned is pretty impressive as far as a technical standpoint. All right, so really nice spot. Here's the intraday picture as it stood last night. Again, even the near-term picture highlighted that beautiful rebound off support. You had 786 retracement there at 29 to add a little bit more conviction on it. We're looking for a break. There's 29.57, 29.69. That's the big region. Monthly open resistance, 30.36. Here would mark resumption, straight up. That refute the opening range break for the month that we got back here on the 18th, and it would be a breach above a huge resistance confluence. So we're not out of the woods yet, but I want to caution you guys about chasing this. If you're holding longs, there's no reason to jump out just yet. Okay, you're in overbought condition. The thing is surging. 30.36 is going to be my line in the sand. If that gives, if you start to see failure there, expect a larger pullback. But largely speaking, we want to see this thing start to ramp up. This was big support. All right, so there's the 100-day, 200-day moving average confluence zone. We just popped through that. There's 130, and there's that slope off the highs. Real basic stuff. So if we get through 30.36, monthly open resistance, at that point, you start to look for a straight up resumption. I haven't added it yet because I was trying to keep this chart tidy, but in this scenario, I'm going to take a quick retracement off the lows here. Just see what comes out. Okay, actually, I'm just going to leave all those and drop this one. So excuse me. That's still bearish. That's still bullish invalidation, rather, guys. Okay, so 129 is now the objective weekly opening range low. It's also confluence support. So that's going to be rock solid, your bullish inval. Near-term support right here still on any drawback, But man, we need to see a reaction right here. The April open at 30.36 for me is kind of like a line in the sand as far as a pivot to the upside. If we resolve the day above that, I like that. Ty saying, do a lot of people trade sterling? I haven't really looked at the volume figures lately. Historically, yeah, it's one of the second largest or highest volume trade there is. These days, obviously because of all the Brexit nonsense, it's been a very, I've tried to steer you guys clear from it. But Ty, when the technical setup is so apparent, I don't give a damn about all the noise. If it's there, it's there. You know what I mean? I'm the biggest advocate of like, Swissy after the S&B, stay clear of it. Even dollar yen when the BOJ was going nuts with their intervention. Don't even bother. But when these things come into major, major technical support like this, there's no point not to. Just remember, Ty, we always want to be a little bit more, what's the word? A little bit more, reduce your leverage, right? Reduce your leverage on a trade like this because it's so prone to major event risk. That said, I've been liking the breakout, man. Long side looks good. Watch for a reaction at 30.36, 30.61 on this stretch. I want to see a daily close above this to validate the breakout. Okay, let's move on. That was sterling. Dollar Pooja says, "Hey Mike, Euro Kiwi at a level now. Can we look near term charts if there is entry here?" Yeah, sure. Hold on. Where's Euro Key? Yeah. Okay. So last night I was telling you guys one of these two levels is where I'm looking for a possible fade. Pooja, thanks for pointing this out. Bullet or bearish inval for the breakdown that we saw here last week off of resistance is 68.58. If it gets through this region, I'm going to dump the idea. I still think you risk another low in price before there's resumption on the back of this turn. So yeah, Pooja, this would be the spot. Bear with me. I don't know if this is going to be fruitful here, but it might. Not bad. Not bad at all. So that's the 618 line, not the 50, which I love when those play out because 618 support, 618 support, 618 resistance. This should be a breakout tagged into this. Yeah, this is actually a near-term pullback play here, Pooja. If you're going to play it, that's the way I would play it. As far as your support targets, don't get overzealous on a move like this, but 67.92, basically 68 for a near-term sort of immediate pivot. That's the extent of a trade like this. So it's going to be tight. You're basically looking at like 15, 16 pips. But it would be a tight stop against the high. Here's a 5-minute chart. And then one other thing I look at when I try to take into these positions into account, you see this near-term divergence. So price action with the immediate two, prompted highs. These are the kind of divergence signals that actually work more so as triggers than anything, right? And then, something like that looks like it basically you're looking for a close on a candle move to get that confirmation for a near-term trigger. Yeah, it's definitely a viable trade idea, but counter trend. Right, Pooja? Counter trend. So light on the leverage, really meticulous on the entries. Your first sort of level is still going to be not too far away. Look at the 68 handle. You might actually just get resumption there off the median line to a new high. So it definitely into this region, you take most of the trade off, go break even. It's a decent scalp, but I wouldn't say it's like super conviction here just yet, Pooja. Euro's breaking out essentially. So with that said, let's jump into the euro. That was Euro Kiwi. Quick segue for number 3. Number 4, here's Euro. We're coming into April open resistance. So last night, Pooja says, okay, thanks. Cheers, Pooja. Thanks for pointing that out for us. Here's the move on Euro. again, it just too freaking clean. You know what I mean? It's too clean. Look at this. This is your quintessential fake out trade. Break and close last week below that momentum trigger. Huge Fibonacci support, 1186. Invisible slope. How many people saw this slope on other people's charts in various websites? Not too many. I can guarantee you that. Everyone's talking about 108. So look, we still could get there, but this slope obviously has been instrumental again in the multi-year pivots on this trade. Here's the move higher. Daily chart look like this. Okay. Again, there's that longer term slope. 111.43 is just something that we had pinpointed, try to kind of eye as support of where this thing would be. Here's the reversal. The point I want to make is, guess what, guys? If we close today at these levels, what do you have? You have a monthly doji right off support. You know what I mean? Obviously, it's just the start of the day, Mike. What the heck are you talking about? But I'm just trying to put things in perspective, right? Despite all the hoopla, despite the dollar rally, despite the dollar decline, it's the same slope and levels we've been talking about since the start of the year. And you're starting to see some reaction here. So, man, it really couldn't get more critical than this, guys. Really below 1184. You know, we talked about there's some soft support heading into like 1080s, but it's really risky. You know, we're basically breaking a multi-year structural support if you get below this. So watch for a reaction right here. Here's Eurodollar on the intraday charts. You're already starting to get that first reactionary move right off April open resistance 112.28. This is why I'm not so opposed, Pooja, to the Euro Kiwi idea. You know, for a near-term pullback, they're kind of both testing the initial target areas of resistance that we talked about. So the update that we for Euro was really the focus was on a reaction here, okay? Because that's what would refute the near-term downtrend. So there's the break. It fueled acceleration. It already has the first target right here at 112.28. As I told you guys on the update on Sunday, really for me, 12:45. That's kind of like the okay mark resumption. Let's get this thing moving. You got the 618 there. It's actually last week's open, oddly enough. Um, so just a decent like reference point, but 1242, 1245, this is kind of the region I would need to mark resumption. From here, sure, you could get a pullback, but I wouldn't want to see weakness below 1186 again. That's a big pivot. Don't forget, it's not just the lows that you made for the April opening range. It's also a multi-month, multi-year Fibonacci level. Okay, from the 2016 lows, 2017 lows, from the advance of that whole move. So it's pretty big here, guys. Pretty big. Any questions on Euro? Again, ECB is on tap, rather the FOMC is on tap tomorrow. No one's expecting a change, but the difference this year, as we get deeper into the year, it's starting to sink in. Every single presser, every single interest rate decision comes with a presser. So there's always going to be that you know risk that he's going to say something or some sort of bluster will come out of him or something that moves the markets. Long story short. So that comes out tomorrow. Again, 2 o'clock is when you get the release. We'll see if there's any change here from Powell on the outlook for monetary policy. Way too steep, but you know, you could put some color to this and give yourself some reference on why these levels are going to matter at this point. Whoops. Support, resistance, and again, this is for me is going to be sort of the breakout zone. I think you'd mark a larger move to get through that. Any questions on Euro? So again, a lot of these trades, combo tie coming up, sir. A lot of these trades, the recoveries are heading into monthly open resistance. It's huge. It's huge. And again, if you get that monthly doji or anything resembling one on a wick of that length into a major multi-year structural support, it would be a really, really encouraging move for at least a resumptive move higher in euro, lower in dollar. All right, dollar CAD. Here's a quick look at what the loony's doing. I covered in this one on Daily FX yesterday. We talked about it just earlier in the webinar as we were opening up. 34.35, 34.37, that's the level that we've been talking about. Here's loonie price action from last night's update. Here's what we look like. So you all know 34.35, 34.37. I don't want to talk about it again, but near term, it also lined up on the pitchfork formation we've been following since last week. That's why for me, it was kind of like a sweet spot to look heading into today's GDP print. Now, you spiked below. This was still a level. Again, I think I know 34.20. Yeah, it was still a level for me that would be, acceptable for an intraday spike. But we want to see a daily close. It needs to level out with a daily close above this if the pivot is correct. Remember, there was a consolidation here, which looked like it broke back on the 24th. There was an opening range, which looks like it broke back here on the 23rd. And both of those are being challenged as support on this pullback. Even if you get down into 34, you know what I mean? It wouldn't be outside the realm of a check of the opening range high for the month before resumption higher. So my focus has been to look for support on this pullback to try to play back on the long side. Obviously, a break of the descending channel here, bear flag for a bull flag formation, whatever you want to call it, would be the resumptive playback towards 35. Here's the move. You know what I mean? Was that it? I don't know. I don't know if there's enough conviction on this one to really put me in just yet. Again, here's the 60. It is an outside hourly reversal off support, off the weekly opening range low, off of Fibonacci. Pivot, 34.37, 34.35. We talked about this region for months. I mean, put a pistol to my head, I'd be playing the recovery. See if that low holds into the US Open. On its face, the way I would treat this is simply a weekly opening range above support. Okay, and again, that 34.37 is a pivot we were watching since last year. So it doesn't matter to me that we intraday spiked below it, no biggie. The opening range high is pretty well defined and respected at 34.75, 34.80. Look for the break for the resumptive move. But dollar CAD's tricky here. Here's the weekly chart, just to remind you again where we're from. If this break of 34, 35, 34, 37 is legit, and last week we did mount a weekly close above it, that should be a break of the yearly opening range, which means as long as we stay northbound of this, the risk is for a resumptive move higher. Now, momentum isn't all that bullish on the weekly chart. There doesn't seem to be much follow through on the break above 34, 35. There doesn't seem to be an accelerated move to the upside as you would want to see of a breach of the yearly opening range. So look, this thing could completely fail. I'm of the mindset that you make another test for at least a ride towards 35. If it fails below today's low, 34 is my level of which, hey, if you break the opening range highs for the month, you're pretty much done. Again, I bring your attention just to the fact that it is the monthly close. So as we head into tomorrow, that monthly opening range high, or I should say the monthly open becomes a little bit less of a major sort of play, but man, this 34.37, 34.35 level it's all about this thing for me right at this point. You're at support. Okay, you're at support. If we breach 34.80, Look for the resumptive move. 35, 35.30s, 35.52. Both of those last two levels up here, I'd actually start to look to fade if we get up here. But at the end of the day, this is big support. It's a pivot in price. Unless we get a close below, watch for a rebound here in dollar CAD. Questions, comments, concerns on Loonie? It's number 5. All right. I'm not familiar with the Kiwi part, actually. Pooja, what was that in reference to? Could you remind me again? Are you talking about the Euro Kiwi trade? Or you just want Kiwi dollar? Euro Kiwi. Okay, yeah. So here's Euro Kiwi. Euro strength at resistance, Euro Kiwi at resistance, right, Pooja? The Kiwi part of it looks like this. I guess this is what you're talking about. The only thing I don't like about Kiwi is the reference of near-term price action in the fact that it's doing nothing since the start of the week. Here's the last update that we had for Kiwi on the intraday pages. Where was it? The 25th. Here it is. So we talked about the fact that the January low, beautiful recovery, right? Just beautiful recovery. It's the opening range lows for the year. You had slope support, right? Basic channel support right there as well. Really beautiful reversal off of oversold conditions back above 30. That's your signal move. First target, second target, 66.73. Weekly open was 66.90, right? We barely missed that one. Okay, here's 66.90. We turned just ahead of it, and now the weekly open, the weekly opening range is setting up just below that basic slope resistance. Here's a 240-minute chart. So there's a couple of slopes here, just a basic pitchfork. I hope it's not too complicated, guys. But here's just a near-term channel. One touch, two touch. This would be the third touch if we do get it, but a parallel of that slope. It's pretty clean, pretty clean, pretty clean. So look, you have an opening range right below slope resistance. If you see the top side break above last week's high, last week's open, you're objectively looking higher, but the problem is you have both of these targets, which are still problematic. Huge pivot zone in price. The yearly open, obviously, it's an objective level at 67.05, and the 618 of the range for the year at 67.22. So both of these are sort of problematic, which is why I don't really know, I don't really have a game plan for how I want to play Kiwi per se. If the downside breaks, I think you get a pullback, but I do still think off the back of this reversal here, right? It's a little bit more daunting that you're going to see some more upside. So even if we get the pullback, I think you still look for the larger recovery. So I'm of the mindset that Kiwis could see some strength. Euro Kiwis at resistance, right, Pooja? So kind of a nice familiarity there that you could see the move down lower in Euro Key as that's testing resistance. So Kiwi's just flatlining here. Just flat. Same thing with the Swissy setup. We'll take a look at that in a moment too. Does that make sense? That is Kiwi dollar, guys. Okay. Last but not least, thanks again. Exactly what I was asking. All right, right on, Pooja. I'm with you. Right on to last update. Listen, gold. This thing is just insanely clean. It's insanely clean. Now, Here was last night's update. We hit sterling, we hit dollar CAD. Went a little bit out of order, guys. We hit euro key, right? And here's gold. Man, this thing is just super clean. So here's the daily chart, right? We talked about that big support, came right into it. Here's the recovery. What's going on right now in price, I think, is more of a near-term consolidation. It's not really about the daily chart. The clarity is all in the near-term picture. It's insane. The low that we made last week, how we turned, kept the focus higher as we came into the week above 1272. The thing kept on ripping. Iman, Pooja, I see both of you in the room. You guys got, well, I don't actually see Iman here today, but you guys got that reversal off 1288. What a beautiful pullback that was. Now you're sitting here right around the yearly open, and you're basically straddling yearly open at this point. Here's what the intraday chart looks like. This is the only thing you need to really pay attention to at this point. Well, first of all, let me just say one thing. That momentum trigger on the daily chart, if that gives out, if and when that gives out, it'll be a nice move for the resumptive trade higher in gold. Hasn't happened yet. Okay, hasn't happened yet. What turned our focus higher last week was simply the rebound off of confluence support, off of slope support, off the lower parallel here. So here's failure ahead of the 50 line. Here's failure yesterday at the yearly open at the median line. Really nice pivot, resistance, resistance, break, acceleration, support, bounce. Here's an outside reversal, move lower. If we break back below the yearly open on this approach, it would open up a larger pullback in price. And again, you're right back at that point looking at 1275, 1276. Now, again, I don't want to make this chart too ugly or complicated, but if you do this, that slope suggests a time value somewhere here, basically into tomorrow, if we do break, right? So I'm of the mindset of, it's not a resumptive move here. I still think it needs to make a new low before it kind of cracks back to the upside. So 1275, 1276 again would be a level I'd be looking for possible exhaustion. As I said, 1272 is now your line in the sand. That's the low day close for the year. We break below that, it's looking for resumption, guys. You're basically looking for 1250. And we've talked about this level at length as well on the forecasts that we highlighted. 1253, 1255, huge region. 50% retrace of the advance, 100% extension of the decline. Nice spot. That's basically the risk on a larger downside move beyond the low day close for the year. All right. And also, just to give a little bit more on this move, I checked this out earlier. If you were to take a measured move to kind of resolve some sort of corrective decline, two equal legs, still takes you to 1275. There's the 100, right? There's the 100. So there's a lot to suggest that, yeah, maybe you got one more low to make in gold. It's been a beautiful trade on the way down where we turned, and on the way up. 1288 was a nice level. Let's see if we can't get a little bit more of a spike, of an exhaustion spike low before resumptive move. At the end of the day, 1292, 1293, this is the region we need to clear to really validate there's a bigger reversal at play here. So I continue to like these gold levels here, just so clean. Hope you guys are taking advantage of it. All right, that is number 7. All right, so that's last night's update. Here's the previous night. We hit Euro, Aussie. So Aussie's kind of doing this thing where it's ticking me off. It's giving you this really kind of pathetic range, again, right around the yearly open. Now on this one, the break of the downside channel that we got early here hasn't really fueled much acceleration. So I'm starting to think this thing collapses lower first again as well. Again, I don't really have much faith in this slope, but it would put a 618 tap down at 70.16. So even if this kind of breaks down, I'd look for some sort of reaction there, both for a resumptive move lower, which would be accelerative, or if this is going to really turn the tide and we've made a bigger bounce here, that'd be the level. Remember where Aussie is coming from. It's a failed break below the weekly key support barrier we've been talking about since the start of the year, or since the yearly stretch essentially, at 70-20, 70-42. We just can't get it closed below that. And last week we crashed below it, but intra-week, it was just an intra-week spike. We closed right there. So the onus is really to get the upside going. This thing really needs to start hauling ass if it's really gonna move higher. If that was a false break type of washout scenario. Otherwise, if we settle back below the low day close, sayonara. This thing, like I said, the next downside target isn't even until like 60, 69.50s on the downside. So Aussie's a no touch for me right now. It's boring. I want to see this thing start to do anything. At the end of the day, we're heading to the close of the month with the weekly opening range right intact. Look for a break for some guidance here. But just don't chase these price action moves on the last days of the month, guys. They tend not to last. They tend not to last. So that's Aussie, number 8. Hopefully we get some clarity here and a move to get this going. Maybe the FOMC, maybe non-farm payrolls gives that a kickstart. Dollar Swiss, same scenario. Levels are the same. No change on that front. Here's the chart. So Aussie, we're basically still straddling this region here. The levels remain unchanged. Here's dollar Swiss. Okay. That near-term pitchfork, yeah, I guess we could still work with it. I told you guys we really don't have many touches yet to work with that slope, but at this point, why not? Nothing to refute it either per se. So you got a pretty tight weekly opening range. The whole focus of dollar Swiss is that you're coming off of big resistance. Here's the daily chart. We're looking at this for a while. Okay, we were highlighting the median line here. Here's the 88.6. I removed it just for the sake of keeping that chart clean, but here's the 88.6, the same level that we initially talked about at 102.12, 102.11. Haven't gotten one close above it. We posted an outside day reversal off the yearly highs, off that slope. We've essentially been looking for a break of that singular daily zone. Now we spiked below it again intraday here, but the daily close will be the real tell on whether this thing's going to correct lower. Ultimately, we're still in overbought. So not a time to really start trying to press aggressively to shorts just yet. Just recognize that, man, this is the level. If it's going to pull back, this would be the spot. This would be the spot. Ultimately, a breach above the median line, you're still looking for 102, 102.60 and 103. So another one where we're kind of just, we're kind of moving sideways. I think, the preferred move for me would be at least a deeper cut. 101.60 is just your primary target on this. Earlier in the week, that confluence region was right here at last week's low. Right now, it's not. So it's still it's still about 101.60 for me. But that confluence region is right there. You see that? I guess I'll put a marker there for now. Former slope resistance, that's the 618 line of the slope. And the current median line, so that's like 101.48, both. Point is, look for a possible exhaustion there if you drop. So Aussie, Swissy, even Kiwi, same deal, all stuck range bound to start the week. Just unable to get any momentum through this. So we'll see if we can't get a move as we head into the FOMC. Again, tomorrow you're likely to get that lull, guys, into the open of the month, but specifically because the FOMC is on tap, there's going to be a very reluctant. Traders are reluctant to take can't speak this morning. To take on new positioning ahead of a major event risk like that. Again, it's really important to stress that we aren't expecting much from the Fed. We don't get any economic projections. We don't get an updated interest rate dot plot. We don't get any of that. We do get the presser though. Okay, we do get the presser though. Bippin, Euro Swiss. Yeah, you got it. Here's Euro Swiss. I briefly touched on this yesterday. Again, just as a quick note, Bippin, I don't trade that pair like at all. But here's what we looked at yesterday. I think the daily chart is kind of something I wanted to highlight. Man, it is ugly. So you look at a chart like this, in my mind, I look to buy a new low. And this is just kind of a snap judgment looking at this from afar, Bippin. Again, I'm not really actively trading this, but just my humble opinion. Um, it, because where we turned was so sweet. That was a big reversal. This was a big support, basic 38.2 of the yearly range, 200-day moving average. Why wouldn't it bounce? Bounce is getting a little bit bigger than I want, a little bit higher than I'd like it to see. Typically, I would like to see that kind of move hold a 618. It looks like we've moved through the 618 at this point. Yeah. But we'll see how today resolves. You know what I mean? I would look to buy a new low. I don't know if it gets quite down as 13.19, but closer to the 50 line of the pitchfork to satisfy a corrective move. Maybe it turns into a consolidation type of move before it resolves. I don't know, but I wouldn't look to buy here. Let's just say that I wouldn't look to buy here. And again, having an opinion, guys, is only 50% of the game. You look for structure. Is there structure to the decline? Is there some sort of formation at play here? And I just don't see it. I just don't see it. I mean, it's a stretch. Yeah, Bippin, I don't have anything on this. I'd be looking to fade strength. That's all I could tell you. Just my humble opinion as a near-term guy. I'd be looking to fade strength on this rally for a pullback. Nothing too crazy. Maybe move like back into the 114 handle would give you a 36 pip scalp. You got to be comfortable with a stop. Ideally, you find some slope, you find some structure on the near term that you trade against because right now the stop is just too big against the highs here. But that's the way I would play this. Just my humble opinion on a near term look. All right. Dollar yen. Someone had a question on that. Euro Swiss. This was number 10. So dollar yen. Ooh. Yeah, it's another one where you're playing with fire. I drew that pitchfork in last week, guys, right? And then on the Friday reversal, it rebounded right off the 50 line, gave us a little bit of a bounce. I was like, all right, cool. To start off the week, let's see what happens at 111.30. If we get a break below this, you basically look for resumption. 110.70 would be a 618. The median line comes in deeper. Here we are with the test. If this rally, okay, if we rebound off this into the US Open, I want to see failure ahead of essentially the weekly open, which is right alongside this pivot. So it's like 111.60. If we fail at 111.60, I'd be looking for the resumptive move. Otherwise, this is just the abomination doing chop stuff. You know what I mean? Something like this. It's just so ugly. This is just what dollar yen does right before it chops everyone up. So, um, on whole, the weekly charts on dollar yen did take us into a really nice resistance spot. And that's why the whole idea for us, at least for me, for the dollar yen pullback was based on how we reacted last week. It wasn't a reversal candle because technically that doji we made into the April mid 15th there uh, was a reversal candle, but it was an outside candle, right? We took out the previous week's highs, we took out the previous week's lows, ultra low volatility environment off of big resistance. Look at the compression. So, guys, one of the things with having a set strategy is you kind of want to know where to look and where the juice is. And on some of these yen crosses and Swissy crosses that I get questioned about, I'm always willing to look at anything you guys want to look at. But I'm just saying, like as a trader, we want to always make sure we're positioning ourselves with what's really the biggest opportunity. Having an opinion on a trade is just that, having an opinion. Having a proper trade setup with proper risk tolerance and proper conviction on the setup, on the actual setup, not just the opinion, that's what makes it an actionable trade. So just take it for what it's worth, guys. Momentum is flatlining. You're right at 50. You're at compression between the 200 and 52 week moving averages. This is as like stale as you can get. So I just don't see what the obsession is with a lot of people still wanting to press a trade on dollar yen. It's not there yet. It will be there, and when it gets to move, we'll be all over it. But right now, it's just super ugly. And that goes for all the yen crosses. Here's Kiwi Swiss. That's the only one that or Kiwi yen rather. This is the only one that I actually was talking to you guys about, I think last week, in the fact that 73.96, 73.91 was a huge level, okay? It happened a little bit later than the confluence region, but the 100% off the high, a 38.2 off the low, and a parallel off the lows from March. All converged right there. We got a little deeper intra-week, but on a closed basis, that's a beautiful support bounce. Can't deny it. So that's why, know where to pick and choose your battles. It's not just dollar yen. If you had to trade a yen cross, Kiwi yen was the one I would be looking at just because of where we reacted last week and how that played out on a closed basis. So, Bipin, I don't want to kind of steer you away, or I'm not sure who was asking about the yen crosses. So that's number 11 and 12, Kiwi yen. So this rebound here, to put things simple, yeah, it's pretty clean levels right there. Initial resistance, key resistance, and bearish invalidation. Support unchanged. You're still looking for that 73, 73.90 zone for support. So the weekly open, by the way, just to note it on your chart, is right here. So you're set. All you did since the start of the week is set a weekly opening range. It's the end of the month. It's the first day of the month tomorrow. Major event risk on tap. Um, look for a break. My assumptive move would be lower for another test of support, but ultimately a test of the upper parallel before you see a sort of new lows in price. So take that for what it's worth on Kiwi yen. Ooh, look at the moving averages up here too. Big confluence zone, 200 a day, 100 day moving averages, 75 and 75.16. Both of those converge pretty darn close to that 50% retracement. So yeah, I mean, I would like to see a little bit of a rebound higher. From a wave standpoint, it could be a 1, 2, 3, 4, 5 already. So you could be looking for a near-term correction first. But that would be sort of my gunshot approach here for dollar yen, for Kiwi yen rather. Questions? Yeah, Euro yen is also a non-starter for me, Bipin. See your list there of yen crosses. That's the non-starter for me as well. It's a false break of not only the monthly opening range low, but monthly open support. Uh, Euro yen more than anything has me thinking just complete range bound. There's nothing to do here but sell near the highs and buy near the lows. Again, guys, it's just the yen crosses. They're not conducive right now to near-term approaches. I don't want to point you guys in the wrong direction, right? And again, having an opinion, Bippin, is only a small portion. Having a setup, that's where we dwell. Okay, well, if there are no other questions, we'll go ahead and wrap it up there. Just a quick reminder also on the crude setup, you're getting a nice rebound off that confluence support region we talked about, 62.56. There's the topside breach. Still wouldn't be buying this just yet. That was a pretty mean reversal off a pretty big region of resistance. So if you're holding anything on the recovery in crude, I'd start to tone that down today. Uh, I still think this thing has to make another stab at a low before broader resumption. So keep your eyes on that. We'll give you an updates if the near-term charts come up with anything, um, slope-wise that can give us some guidance on the decline. Yeah, there's nothing there yet. Okay. Pooja says, I know you don't trade agriculture commodities, but if you can take it, please look at coffee, possible futures long. What's the ticker, Pooj? I got to actually run here, but what's the ticker? And I'll take a look at it. Jamie's up tomorrow. He's your guy for the commodities, excuse me, for sure. Yeah, some wicked divergence here. Um, yeah, it's struggling to base. Now, let me tell you. Let's say this: when you see the longer the base takes to play out, the more significant the reversal is, right? So the fact that we didn't get a drop like this and then a drop like this, then a rip, this has me thinking you're working more on something like this, where there's a bigger base building. It's not going to be a reversal then a rip higher. It's going to be a couple false starts before this thing starts to go. Now you're also seeing that because the divergence signal that you're getting along the lows here is pretty interesting. Um, you got something like that. Not so apparent here. Here was kind of where the biggest move was, but you're getting that here, right? This is a series of equal lows, then a higher low as price is still dropping into fresh lows. The only thing is I don't like that I don't have any structure down here. And now I haven't spent any time on this chart. I'm looking at it for the first time. So maybe a deeper look can give us some clarity as far as sort of a time to try to trade this turn, but it does look quite tired at these levels. Pooja, you sparked my interest. I'm going to take a look at this for you. But we'll have to revisit this back on Thursday. All right, guys. Best of luck trading. Look, the FOMC is on tap tomorrow. Watch for dollar support on this pullback. If it slices through and it fuels further support lower, that may be the catalyst that we were looking for to charge the move. Otherwise, watch for the start of the month to give us a tell on what's going on in price here, specifically with non-farm payroll still on tap this Friday. All right, don't forget Jamie's on tap tomorrow, and I will see you guys on Thursday morning. Best of luck trading. Cheers.